Right. Pretty interesting session in the US and certainly like in the Asian time zone as well, and Europe. We're going to start with the cash market, a little bit different. The reason why we're going to start here is there are a couple of people around and they talk about the futures market. They call it fake futures. Right? Now, if you're listening to anyone that talks about the futures market and is referring to them as the fake futures, do yourself a favour and turn them off. The futures market is not the fake market, or if anyone is telling you it's fake, they just do not understand financial markets. And in my opinion, you should not be listening to them. This is why, right? So you can see everywhere, gaps everywhere in the cash market. Why do those gaps happen? Because this market trades 6.5 hours a day, I think it is. There's 18 hours, right? 17.5 hours, whatever, that you're missing out on if you're just looking at this. Now, there is different liquidity in the futures and the cash market, but a lot of risk trades and changes hands in Europe and Asia. There are windows where you can move the futures a little bit on less liquidity in some markets, but really this big one, the S&P, no. Now let's have a look. We're going to go down like in a 15-minute, time interval here. Look at this, right? One bar to the next. How long do you think this took to go from there to there, right? 17 hours and 45 minutes, right? 0.8%. Right? That is what happened in Asia and what happened in Europe. This is the cash market, right? So if you think the futures market is fake, what do you call this, right? This is called going to bed at 43.63, waking up in the morning at 4,400, right? Going, what happened, right? That, some people call the fake market. That's not the fake market, right? Let's look what happened. Let's put that aside there. Let's look what happened in the real market, so to speak. Well, it went nowhere, right? Over 6 hours and 15 minutes, right? So we've got the fake market going 0.8% in 18 hours. Then we've got what some people say, the real market, the only one you should watch, basically treading water. Well, it is trading in this same range, right? But ends up kind of going nowhere, right? Which one looks more real or fake to you, right? They're both legitimate. They're both real, right? Let's have a look at what happened in the futures over that same time, right? This is that same window, right? 18 hours. It's called like, if we do it just down the 15-minute, exactly, 6:45 to whatever, to 12:30 at night. This is Australian time zone, right? This is what happened. That is not a fake move. That's a good, steady run. And what's more, you can see this key level, this 43.80, which has been quite a key level, moving a few points either side. It totally did the turn and go. Right? So that's what you're missing out on if you think this market is fake. So I said, if you're dealing with anyone that talks about the futures and says it's a fake futures, they do not know what they're talking about. They might be talking a good game, but they are absolutely full of SH1T. Leave a comment in their thing and say, dude, get a grip on yourself. These financial markets are global. They trade 24 hours a day. If you want to ignore this, be my guest, right? If you're listening to someone that says ignore this, then I've got no idea why you'd be listening to them at all anyway. So that's the first thing that I'd like to say. Having said that, so the arm wrestle has been, continuing this breakout, and it was quite a move led by, the overnight market, US overnight, led by Asia and Europe, that really broke this 43.80 level. So around about 4,400 in the cash market. This is the futures market. It's a bit of a difference, but it did stall at this 44.26 level. in line with that trend line, and as I said, a big level in that wedding cake. So the bear market is still very much in play, but that was quite a win last night for the buyers. As I said, I've been looking at a few things in this market. Obviously, this is the long trend line that's been going back since February, March last year. Okay, this is a bit of the toot you're in trouble pattern, and I always see this pattern stalling around the middle. Right? Well, that's generally what I see, stalling around the middle for it to come back and sink further quite dramatically. This is still a concern to me. I'm still short. That 44.30, I was watching it very close last night. If it's going to break that, that would be, I didn't put more on, as in the wee hours. I didn't quite feel confident enough about it. And also there's the non-farm payrolls coming out tonight, which I think will be certainly have potential for a big trigger one way or the other. That's the US market, so there's still an arm wrestle. They'll be buying down at like that 43.80 level. They'll be selling up here at 44.30, but there is likely to be a trigger tonight with the payrolls number. You can see the same thing that's happening in the Aussie market. That downward trend has been intact. It's still jumping around. It didn't rally back as far as the US. It lagged a little bit, but it's still the same game that we're playing. Incidentally, this is another reason why you need to understand the futures market, because this is a rally in the futures market, and the reason why it rallied was because the cash market traded sideways as it lost all these dividends. A lot of dividends in Australia, lost like about 100 points of dividends, and so the futures market rallied back to the cash market. So when we look at the cash market, we're not going to see this rally over that same period. We're going to see it going sideways, which is that. Right? So that's another reason why you've got to understand the futures as well as the cash market, right? Because this held up very well, right, despite dividends dropping out. So it doesn't look like a double top, but if the dividends had stayed in there, it actually would be. Right? If the dividends had stayed out, that gap is because of the 100 points of dividends that dropped out in the Australian market over that point in time. And you can see it's like 75.40, 76.32. It was 100 points in dividends. Look it up, you'll see it. Otherwise, it would look like the cash market. No, it would look like the futures market. So similar thing in terms of the Aussie and the US market in terms of those dynamics. One thing, I'm not sure if I've got it on this chart, but if I go back a little bit further, I was talking about in the S&P, the jaws, the reverse triangle, reverse megaphone, whatever people call it, the toot you're in danger. That's what I'm talking about, right? That kind of pattern, right? So that is the same pattern. That was on a big lead up that happened over the long term leading up to this crisis. And you can see that the highs get higher, the lows get lower, and then all of a sudden it just breaks. It says, look, I'm over, and it has a stall around the middle, right? So that pattern there, you can see that is what I was talking about in the US market on a shorter time frame, of course, up here where it's done the highs and the lows. We've had a bit of chopping around, a high, a lower, like a lower low, a high, a lower low, a lower high, and it's looking tenuous here. So if it comes down, it could go down there, it could break further. If not, it'll be off. But these are a volatile pattern, clearly saying the market doesn't know where it's going. The Aussie dollar, quickly, same thing, it's still jumping around. It hasn't kind of broken. That downward trend is still intact, looking for a break of this 72 to 73 range. Gold, here we go. Still in really round about in the middle of the 17 to 18 range, looking for a break. So it's been the same thing in these markets. And the other thing I'm just going to point out quickly here. I said it before. There is this little topping pattern in gold, where it has been having progressively lower highs, but a bit of a floor underneath. And really what this is saying the buyers are not getting any more aggressive. This is saying the sellers are getting more aggressive. Right? And so that's why these things generally pop that way. Right? That's really what's going on when you're reading what is the price action. Everyone's saying, well, I'm going to buy here, I'm going to buy here, I'm going to buy in this zone, I'm going to buy in this zone. I'm not going to buy higher than that. When it goes up, the sellers say, nah, it's all coming down. And eventually the aggressiveness of the sellers takes control and the buyers lose out. And of course, that's exactly what happened over here. Let's wait for my computer to catch up. It's exactly what happened over there. When we look at the Australian bond yields, again, it's similar with the Australian and the US, the spread trades around like a little bit. It's exactly the same pattern that happened here. You know, you can see it. Excuse all the lines. When my computer catches up, you can see it's that same triangle where the buyers were here. The buyers were all here. They're saying, yeah, lots of buyers, not every buyer, but a lot. And the sellers were going, no, and eventually the buyers capitulate and it's over and it goes all the way back. So you see that pattern that's happened in the yields. I expect it to happen in gold. It happened to a little degree in oil. Not really as convincing, but when we look at it on a smaller time frame, you can see a few interesting things. This is a bit of a textbook example of like 3 different flags, like in action, right? This one, right, is the reverse of the one I showed you, where the sellers are kind of staying put, but the buyers are getting more aggressive, right? They keep hitting up against the buyers, and the sellers. This is a sign that the buyers are getting more aggressive, and they win, right? These ones can break either way, but the general rule of thumb is they break the way the trend entered. They leave the same way, right? So it goes up into this triangle, it goes up the other way. This one, similar kind of pattern, but reverse to here, where the sellers were getting more aggressive. There's a false one here, but you can see the sellers, this is like on a 1 hourly chart, they put it back in its box straight away. Let's look on a shorter time frame. We'll see a little bit more clearly. Right? It didn't start there very long at all. Right? And so the buyers were here. I'm going to I'll buy. The sellers go, mate, you're out. Nah. The buyers have a little bit of the thing, but the sellers go, look, mate, you cannot be serious. Comes big, has a test, and it's over. Right? So when I look at these patterns, that's what makes me think I've seen it sort of in oil. And I said I got long at like at 70, just on $79. It's 78.95, I think, that I got long at. Saw it come out because I thought it was going to break. Came back down, said, nah, it's doing one of these, which of course it was, and it was out. So I was in and out for square, came back down. I still think oil is a buy, but this one, I didn't have my eye on the market today. I was at the kids with the park. So that's what's going on in oil, the currencies, the bonds, and the US market. The US market obviously is central to what's going on tonight with the non-farm payrolls. That will be one to watch. And again, when we look at it on this tight time frame, same as oil, this looks like, certainly in this time zone, which has been, basically the last 24 hours, right? Basically from the close of, from the close, this time yesterday, right? 6 o'clock Australian time, last 24 hours, that pattern has been unfolding, and it's very much due to break. And if those other precedents are anything to go by, it's going to come back down, and it's going to go back into this space. As I said, the fundamental problem with technical analysis is you're looking at patterns from the past to try and have a stab at what's going to go in the future, right? And these things do not always repeat. But one thing's for sure, it's going to break this pattern anyway, just by the very definition that this pattern is coming to an end. Right? So it's going to break one way, and coincidentally, where it's going to end here, this is like around about 10 o'clock Australian time. So about an hour, like 11:30. That's when the payrolls data comes out, like at 11:30 our time, Australia time. So that will be, so it's just going to probably chew down the clock until there. If those other patterns are anything to go by, it'll have a, like a little bit of a last gasp, and then it'll be all over. That's the way I'm positioned, but obviously I've got some stops. This level here, 44.30, very key, the previous high from just the last 24 hours, and we will see what happens. Anyway, so that's it. So I guess the message for today, watch the futures. If you're listening on this derogatorily talking about the futures market as the fake futures and the fake market, they're a baby. Don't listen to them. Listen to the market, which trades 24 hours a day, which includes the futures. And if you miss out on that, then you miss out on it at your peril, and you would have missed out on some very important price action, namely all of this, right? Like you would have missed out on that big move because you listened to someone that didn't know what they were talking about. Anyway, that's it. Have a good day, and we'll catch you later on. Ciao.